70% of Berkshire Hathaway's entire portfolio, concentrated in just 5 stocks. This is happening right now, and most retail investors have absolutely no idea what it signals. Here's what's really going on and what you need to be thinking about immediately. Berkshire Hathaway's public equity portfolio currently sits at approximately $319 billion. 5 positions control 70% of that capital. 5. Apple alone commands roughly 44% of the entire portfolio. That's over $140 billion parked in a single ticker. One company, one bet. Bank of America holds the number 2 slot at approximately 9%, nearly $29 billion in exposure to a single financial institution. American Express sits at position 3. Buffett has held this name for over 30 years. That's not a trade, that's a conviction. Chevron rounds out the energy play, billions in hard asset exposure as Buffett quietly bets on hydrocarbon durability in a renewables-obsessed market. And Coca-Cola, the original Buffett legacy holding, still anchors the bottom of the top 5, a position he's held since 1988. Here's the pattern interrupt you need to sit with. The man who literally wrote the playbook on value investing is running a portfolio more concentrated than most hedge funds. Let that land. But here's what nobody is saying about this yet. Concentration at Buffett's scale is not the same animal as concentration in your portfolio. Berkshire carries $167 billion in cash and equivalents as a buffer. It generates tens of billions in annual operating cash flow from its wholly owned businesses, insurance, railroads, energy. The public equity portfolio is one layer of a multi-layered fortress. Most retail investors copying this concentration have none of that infrastructure underneath them. 0. That asymmetry is the story Wall Street keeps glossing over. First consideration, audit your own concentration right now. Pull up your portfolio. If your top 5 positions exceed 60 to 70% of your holdings, you're running Buffett-level concentration without Buffett-level downside protection. Second consideration, stress test the anchor position. Apple is 44% of Berkshire's equity book. Ask yourself, if your largest single holding dropped 30%, what does your total portfolio look like? Run that number. It's uncomfortable. Do it anyway. Third consideration, separate the strategy from the operator. Buffett's concentrated approach works because of his decades of due diligence, his permanent capital structure, and his holding horizon measured in decades, not quarters. Mimicking the output without replicating the process is a high-risk move. 70% in 5 stocks. From the world's greatest investor. Is this a masterclass in conviction or a warning sign hiding in plain sight? What do you think this means for your portfolio? Drop it below. We read every single comment. This video is for educational purposes only, not financial advice. Always consult a qualified financial advisor before making any investment decisions.